Fundsupermart.com.
What are the performance drivers that contributed to the fund's strong outperformance against the benchmark and peers in early 2012?
Sure. Year-to-date, fund performance has been decent. And as of yesterday, I think the fund is up about 23% and outperformed the index by 8%. I would say it's not really contributed by a particular stocks or sectors. It has been a very broad-based rally, and it's quite different from the past cyclical rallies where you see cyclical stocks go up more significantly than the other sectors. I think this time the rally is a bit more broadened out. So the contribution in terms of our performance has come from both long side of the book and the short side of the book. If you remember, the fund is really 150% long, 50% short. So in the long side, I think the financial stocks, including banks, property, and insurance company, have done very well year to date. And also selective stocks in consumer discretionary space like high electronics, digital China, they have done extremely well year to date. And also at the same time on the short side, some of the utility or telco shorts we have been doing year to date, and even some industrial company shorts we have underperformed the market significantly. So that's really the contribution to our performance has been coming from.
China was one of the worst performing markets over the past 2 years. How did the fund navigate through these tough times?
I would say, China has had a pretty difficult 2 years now in terms of market performance. The fund, given its 150% long, 50% short structure, it does have the ability to short some stocks or sectors we don't like. So therefore, at the same time, the fund has flexibility in terms of utilizing options to protect downside if needed. For instance, August last year, the fund had some put option in place to protect the big sell-off, versus big sell-off in the market. Having said that, the fund performance was hurt pretty badly in August, September last year due to dislocation in terms of valuation in the stocks. But going forward, I think the fund will be structured in a way you focus a little bit more on picking the short stocks which can protect you more on the downside.
The fund is classified as an alternative investment on the Fundsupermart platform because unlike traditional China funds, this fund can also short stocks. What are the advantages of doing so?
I think actually probably this fund should be, really we need to discuss whether it should be alternative category or it's a long owning category, because for instance in Morningstar we actually classify as a long owning category. The reason has been, even though you can short, but net exposure of the fund will always remain, normally would be 90 to 100% net exposure, to give you a full exposure to the market. So it's not really a hedge fund, targeting to protect, targeting with 0% net exposure in extreme market conditions. Therefore, I think, but the advantage the short gives us is, for instance, a stock I don't really like. For instance, early last year, we were shorting some industry and shipping stocks. In a traditional long-owning fund, if you don't like the stock, you probably choose not to own it. So therefore, you underweight versus index by about, say, 0.5% or 1% if it's a small position stock. But given we can short 1 to 2%, therefore we're underweight versus index by about 2 to 3%. So if our call is right in terms of this stock doesn't perform versus index or even going down, therefore we can gain positive alpha coming from the shorting positions.
So how do you select your short positions?
Short position is it's actually in terms of methodology, it's almost the same as how we selected longs. So we look at valuation of the stock. If it's more less cyclical, more I would say more sustainable growth stock, we think it's more like a core short. Therefore, look at the discounted cash flow of the company and decide whether this company is fundamentally overvalued what is the cash flow, and some of them are cyclical companies like shipping or steel. Those companies are pretty difficult to do a discounted cash flow on those stocks. So I think we're looking into the next 6 to 12 months cash flow and the earnings of the company. So those companies are no more cyclical shorts, holding period generally relatively shorter. In terms of methodology-wise, it's almost the same as how we pick the loans. And also, at the same time, one thing I can add is relative as well. So as long as I can find better loans, as what is the short in terms of valuation, you can do a pair trade to a certain extent in some occasions as well.
The fund has been underweight the Taiwan market, in fact taking a short position in it for some time now. However, the Taiwan market has done pretty well since the start of the year. So have your views on Taiwan changed since?
I don't think our view on Taiwan has changed much. The reason we've been shorting Taiwan market, we're not really shorting Taiwan. We're not just only short Taiwan stocks. We do have long in certain of the Taiwan stocks, but we have short in certain Taiwan stocks as well. So net, we are short on the Taiwan market. It doesn't really mean we really hate the Taiwan market, but it's very, very round in a way we can find more interesting stock ideas in the Hong Kong market. So relative wise, we like more selection of Hong Kong stocks versus Taiwan stocks. That's why we do this long short in terms of market bias. But it doesn't mean we think the Taiwan market doesn't have any upside at all, given it has actually, Taiwan market did pretty poor last year. With the US and Europe recovery, it does have decent chances of actually going up.
Thank you.
Yeah, all right.
Okay, cut.